Good morning or good evening, depending on where in the world you are. Thank you to everyone for joining us for Hot Chili's webinar today. We are joined by Hot Chili's chairperson, Nikki Adshead-Bell, and Managing Director and CEO, Christian Easterday. Before we begin, we have a few housekeeping items to be addressed. One, to ask questions, please submit your questions by hitting the Q&A box at the bottom of your screen. From there, the audience is able to upvote questions to increase their priority. We will be unable to get to all of the questions on this call, so we will do our best to answer the most popular questions and topics. For those questions that we do not get to, please contact the IR team. Two, given Hot Chili's shareholder base is spread out over several time zones, there are many investors who are unable to make the live presentation. Some of these investors have emailed in questions, which we have curated to address the most common themes. We are going to start the Q&A session with the emailed questions, which will give the live audience time to ask and vote for the questions that you want answered. Today's webinar is being recorded and will be posted to our website and pushed out via our subscriber email list. And lastly, a few words about forward-looking information in today's presentation. On behalf of the speakers that follow, listeners are cautioned that today's webinar and the responses to questions may contain forward-looking statements. Forward-looking statements involve risks and uncertainties, and undue reliance should not be placed on such statements. Certain material factors or assumptions are implied in making forward-looking statements, and actual results may differ materially from those expressed or implied in such statements. With that, I will now turn the call over to Nikki and Christian. Please go ahead.
Thanks, Jonathan. Well, great to be with everyone today to discuss some of the key aspects of our recent financing and also the next steps for the company in what looks to be a very exciting period ahead for Hot Chili with a significant increase in the backdrop of the copper price. So, Jonathan, Graham, I look forward to the questions.
Perfect. Go ahead, Nikki.
Yes, I just wanted to thank everybody who has dialed in or who will be listening. We really appreciate both existing shareholders and interested members of the public taking the time to watch us and also to ask us questions in terms of better understanding what Hot Chili is and the value that we think that we can generate going forward.
Thank you, Nikki. So we can jump right into it. I'm going to start by reading questions, and we can either Christian or Nikki jump into to answer as we go. So the first question we have, the company has recently completed a successful private placement of approximately $25 million Australian and a $7 million Australian share purchase plan. Can you discuss who participated, and did Glencore or other major shareholders participate?
Yeah, thank you, Graham. Yes, we're coming off the back of a very, very well subscribed private placement, as you mentioned, where we saw significant demand from both Australian and North American investors, also several institutional funds. Regulators unfortunately preclude Hot Chili from disclosing details of participants in financings. However, to provide some color, we had approximately 24 participants, including 17 institutional participants in the $25 million capital raising that was subscribed. By about 90% of those funds were institutional. And within that grouping, we were very, very pleased to see 13 institutional participants from North America, of which 6 participants were new investors in the company. In relation to Glencore, obviously, ASX regulators, they require shareholders that hold over 5% in the company to self-report any movements plus or minus 1%. And Glencore has obviously made an announcement on their behalf. So yes, they were a participant within the capital raising, and they currently hold a shareholding of 7.5% in the company. We also saw participation from some of our other top 5 shareholders, which was very pleasing to see.
Perfect. Thank you, Christian. Our next question, the funding obviously puts Hot Chili in a strong position at a time of a surging copper price. The capital raising announcement mentioned the company has been receiving increased strategic investor interest. Why undertake a capital raise now and not pursue a strategic partner?
Sure. Thank you, Graham. Yes, we've been very pleased to see an uptick in the amount of inbound interest coming into the company. We've been really receiving quite a significant increase in that interest over the last 3 months associated with the rising copper price, which has risen well over $1 now over the past 3 months. As most people know, it's very important for any company to negotiate with a strong balance sheet behind it. The company's treasury was certainly healthy enough to allow us to complete our stated goals. But what this raising has meant is that this has given us the time to be able to undertake discussions with those parties, which are often discussions that do take quite some time, and allow the company to be in a strong position financially to undertake those discussions.
Great, Christian. Next, your stock has had trouble with liquidity on the TSXV. How does this funding address the liquidity issue? And do you believe the company will be able to bridge the gap between Canadian and Australian copper equity valuations?
Yeah, thank you, Graham. As most people know, the company has made a significant investment into the North American market since we dual listed onto the TSXV just over 2 years ago now. What this capital raising was primarily looking to do was also to increase that liquidity. We have around about 8% of the register that is in the North American market on the TSXV, and also with our subsidiary listing on the OTCQX. So bringing in 13 North American institutions has certainly increased our liquidity going forward, and we were able to do that through the life offering. What we are investing into the North American market is about where the company is looking to position itself as we move towards a financing on this very large-scale copper asset. So we're investing in regular trips to the North American market, participating in all of the key marquee conferences, and expanding our relationships with both investment banks, broker groups, and all of the international and institutional funds that are up in Canada and the US. So that is a long-term investment. As you know, we have Dr. Nikki Adshead-Bell now as the company's chairman, and we also welcomed Stephen Quinn onto the board, both based in Canada, and those efforts will certainly continue. We're following a very, very similar model to what was undertaken with Equinox in the last copper cycle. It takes time. It takes further liquidity going into the North American market, and we're very proud to see that growing stable of shareholders in North America.
Thank you, Christian. The next question, your PEA last year suggested for every 10-cent move in the copper price above $3.85, an additional $100 million would be added to the project's NPV, net present value. Are these numbers still reliable, or are they out of date?
No, very reliable. That is our current preliminary economic assessment. It was undertaken about 9 months ago, so these numbers are fairly fresh. And what that does indicate, similar to the leverage of other very large-scale copper developers in the world, there are not many. There are 6 companies on the ASX and TSX outside of the control of the majors that hold plus 100,000 tonne per annum projects that are able to produce at that level. So what that means is at this current copper price of around $4.85, our post-tax net present value at an 8% discount rate is around about $2.1 billion, IRR north of 35%. So that is very, very encouraging on a leverage perspective. And so we are certainly looking forward to a trickle down from the reaction of the producers, which are directly exposed to the copper price right now. We've seen a significant lift in the performance of those stocks, and we're likely to see that now start to move to developers.
Thank you, Christian. Can you discuss the share price performance of HCH against other large-scale copper equities?
Yes, certainly. Look, it's always important to have context and to look at the relative share price performance. I'm just bringing up a presentation which has some supporting information. Obviously, if we are to look at the relative performance of Hot Chili on both the ASX or TSX, we can start to understand where the performance of all of the space is in relation to the movement of copper prices recently. This first feature is Hot Chili in red, that is plotted on a relative performance basis against all of the key ASX large-scale copper developers. So the list is not exhaustive. In fact, there are only really 4 key large-scale or meaningful copper developers on the ASX, but we've also put some of the smaller developers, the Cypriums and NWCs and Eagle Mountains of the world into this list. So this is performance from the beginning of 23. And you can see that really at this point in time, Hot Chili is a front runner on relative performance. Xanadu has outperformed the market coming from a low base, but at the moment, Hot Chili is performing quite well. What you can see is that most of the performance of the ASX copper developers since about the last 3 months, where we've seen a significant uptick in the copper price, that those developers have probably seen around about a 10 to 20% lift in equity prices. And a similar thing is playing out on the TSX. Here we look at the TSX and TSXV copper developers against Hot Chili. Again, Hot Chili in red, and NGX, a standout performer into the North American market. But again, not really seeing a huge lift in the developers at this point in time. As I mentioned, I expect that there will be trickle down from the producers, which has seen 30 to 50% lifts in their equity prices over the last 3 months, start to move into the copper developers, and obviously starting with the largest developers first and moving down to the smaller developers, and then moving into explorers as we start to see this cycle take hold. But at this stage, Hot Chili performing quite well in line with our peers.
Thank you, Christian. Next question. The recent funding appears to have caught the market off guard. Can you discuss the pricing of the funding and why this was not telegraphed to the market in advance?
I believe I'll be taking this one.
Yep.
Number one, if it had been telegraphed to the market, we would not be doing our job properly. And so in our sector, I think if anybody looks at any company that has had an equity financing in particular, no one would ever telegraph it to the market. And there's a couple of key reasons for that. Number one, if investors think that an equity financing is coming, the behavior that almost always occurs is the share price sells down. And why is this? It's because investors sell their existing position down because they know they'll be able to buy it cheaper in the market. And this pattern plays out over and over and over again. And as a junior developer and as a non-positive cash flowing company, like all of our developer and explorer peers, the way that we have to fund our business is via debt, which I would advise nobody to do because that can have very, very negative consequences. It's via traditional equity. It's via a strategic investor in your equity. It's at the project level, or the most recent form of financing, which we achieved last year, is financing via a form of a royalty or a stream. So the fact that people were surprised by us financing, I would say that that means that we did our job well. And the best time to finance for a company like us is again when the market least expects it, because if they do expect it, you'll see selling of the shares ahead of a potential financing. We've also had some commentary and some questions about pricing. Again, if you look at any equity financing, I would argue almost every single one occurs at some type of discount to the market. The only time that I have seen that not happen is in a crazy bull market, and we are definitely longing for those days to return. But it's normally when you have a strategic investor, and that investor agrees to invest at a premium to have a strategic toehold in a company. But traditional equity financings like we achieved, and I must congratulate our management team. They did a superb job. I've been in this business for a very, very long time now, and there's very few financings that of this tenor that closed this quickly. And so I think it was actually an incredible achievement. And just back to the pricing question, which is one that has popped up on a number of occasions, is unfortunately, we can't dictate pricing. I wish we could. When you have an equity financing, it's normally the lead order or orders that negotiate the price that they're willing to invest in the company. And so most equity financings occur at a discount to the prevailing share price, and it's normally calculated on some volume weighted average, normally 20 days. And in addition to that, we achieved a financing that was a straight share financing. And so commonly what you see in our sector, particularly with Canadian listed companies, is smaller companies do want warrants with a dilutive attached. And what I mean by that is they have a warrant or a half warrant or a quarter warrant. In Australia, that language is termed an option. And what that means is they get exposed to a share in the company, and then the ability to buy a share or part of a share thereof for a fixed price for some predeterminate time in the future. And in my opinion, doing warrant financing or financings with some sort of dilutive attach, that can normally be a negative, because what that does is it provides a future suppressant on your share price. And so if your share price hits that exercise price, normally what happens is people exercise those shares, and then to cover their risk, they sell those in the market. And so again, I think it's a testament to the quality of the management team and the quality of this project, and probably where we are generally within the copper cycle, that we achieved a financing of this kind of tenor, and it was a straight share financing.
Great, thank you. Our next question, there have been some questions and commentary regarding a change in the company's strategy. Can you further comment on this?
Yes. Christian, do you mind bringing up the presentation? And I apologize in advance. I'm slightly obsessed with animation, so we'll see how this goes when I'm not controlling it. With respect to strategy, I mean, ultimately our job as a board and management team is to fulfill our fiduciary duty and duty of care, and that's to all stakeholders, including shareholders, and not to necessarily individual shareholders. And as a company that, again, has to finance our business via equity markets or some variation thereof, how we do that and how we strategize, it's really important for us to step back and understand where we are in the commodity cycle. Because ultimately, if you're in a rising commodity price environment, essentially a rising tide floats all boats, and of course the opposite occurs. And so if you can just forward this. So this is a chart that I've adapted from Scotiabank Quarterly, and this just shows that every single commodity has peaks and troughs. And ideally, as an investor, you're buying towards the trough and then getting exposed to the peak. And I just wanted to touch on, I think, a recent very, very clear example of what a commodity cycle can do in terms of the underlying commodity price performance, but then all of those equities that are associated with that. So I think we're all very familiar with the great bull run of lithium that really began in December 20. And so in December 20, people were relatively negative about the commodity. It was trailing, it was flatlining, there wasn't much interest. And then over the next 2 years, Christian, if you could click it forward, there was an exceptional price rise, over 18 times in the lithium price, and then up until November 2022. And so if you were a lithium company that had any exposure to lithium, if you just had lithium in the title of your company, you had essentially exceptional share price performance. And so what the lithium commodity cycle did, it did what it should have done. That exceptional price performance in the commodity, that engendered an enormous amount of investor interest in equities that were exposed, or companies that were exposed to that commodity. And so we saw a huge amount of money flow into the sector, and that did what it should do. It resulted in expenditure in the ground, in numerous discoveries. We've seen material new production come online. Now, if we just move forward, Christian, I would argue we have obviously seen a fairly material down drop in the lithium price. And so we will all have our different opinions. If I or many industry pundits could exactly guess when prices will move and at what times, I don't think I'd be swanning around the Mediterranean on a very, very large boat. But I would argue that lithium probably has more downside risk than upside risk. Now, moving to our favorite commodity, Christian. So if we just look at this same chart where we are with copper, and of course, this is my opinion, and I will absolutely acknowledge that I've drunk the Kool-Aid on copper, I would argue that we're close to a trough in the commodity price. And there's a whole bunch of reasons, and we could spend hours discussing that. But if we look out to the next basically 18 months, primary copper production starts to materially decline. And that's in the context of an increasing demand environment with the move to net zero. And so I think that what we'll see over the next couple of years, and I've said this publicly on numerous occasions, I think the copper price has to materially rise. I think the incentive price of copper is between $6 and $8. And you need to see that copper price rise to incentivize investment into new production. So I think we're in a very favorable time in the commodity cycle. So just back to our strategy and talking about, sorry, Christian, yes, move on to the next slide. That would be great. So what I'm going to touch on here, it's really discussing the commodity cycle and then corporate and investor behavior that responds to that commodity cycle. And in our industry, I think the foremost dangerous words, this is not my quote, but I think it's a very valid one, is this time it's different. And so what you tend to see in commodity cycles is very, very, very predictable behavior by most investors and most corporates. And so if you acknowledge that and understand that, as an investor, and in our case, as a company, and try to manage your business depending on where you are in the cycle, what you're trying to do is ensure that you're advancing your asset as aggressively as possible when the market is paying for you to do that. And that normally occurs in a rising price environment. So I just wanted to touch on a couple of key themes here that I use to help myself retain a degree of objectivity about where we are in the cycle. And this is not my idea. It's an absolutely superb idea from Line Selection. They have quite a famous mining clock, and I've adapted and simplified it in terms of how I view it, the world. And so if we look at a bear market, and Christian, if you could just click, I think we all know when we're in a bear market, at the nadir, you tend to have bankruptcies, you see asset sales at very low prices, you have dilutive financing in the junior sector, where those financings are just to keep the lights on, just to keep the company surviving. They don't result in the ability to expend excess capital in generating alpha or events that will drive the share price above and beyond the commodity price movement. Moving on, Christian, as a bear market, and in this environment, I'm going to touch on generalists and resource investors here. Normally, generalists are buying at the top and selling at the bottom. So what happens at the bottom of a bear market? All investors demand capital conservation and low risk behavior. And so they demand that companies stop spending money on non-core expenditure. Exploration dries up. Exploration geos, I'm a geologist originally before I turned to the dark side. Geologists are fired. Everybody is focused on not spending money and trying to avert bankruptcy. And in my opinion, this is where the really smart resource investors buy, because normally the commodity prices stabilize and the businesses are almost as fiscally responsible as they will ever be. And that's partly because they've been forced to do that. Then as the cycle continues, you start to see prices, the underlying commodity price, rise. And then you start to see very typical behaviors in our sector. And that's low risk M&A. And what I mean by low risk of M&A is like merging with like. And so you'll see producers acquiring producers. And we have seen this behavior in the majors. We've had BHP acquire Oz Minerals in the last year, and we have had BHP obviously announce an intent to try and acquire Anglo, materially probably for its copper production, and so Anglo is arguably at play here. But again, it's low risk. It's not acquiring development. As the cycle continues and the underlying commodity price, capital suddenly becomes available, and it starts to become available for companies like us. The developers and the higher risk explore codes. And so you normally see a number of financings, and we've seen this in recent months in the Australian and the Canadian markets, as companies like ourselves are starting to strengthen their balance sheet in the preparation for where we think that this cycle is going. And I would argue that this is the very early green shoots of a bull market. And we don't know exactly when when the craziness of true bull markets occur, but we know we're probably at the beginnings of it. And then as the cycle continues, Christian, we start seeing capital deployment in higher risk activities. So exploration companies are exploring and drilling holes. Companies like ourselves are doing that, but also advancing our development projects. You tend to see new discoveries. The commodity price continues. Christian, if we could just move on to the next. You start to see new IPOs. We saw this in the lithium sector, where suddenly every company that had been a gold company or a nickel company or a copper company desperately wanted to prove that they had some lithium. And suddenly growth matters. And so what happens at this juncture in the cycle is investors start demanding growth. When companies go and meet with investors, they're not getting questions on capital conservation and what's your balance sheet look like. It's tell me where your next growth is coming. And then at the top of a bull market, this is when high risk M&A explodes. And in our sector, companies tend to, particularly larger companies, they tend to be rather sheep-like in their behavior. And so you'll see once one larger company does it does something like acquire another company, then lots of boards and management teams sit back and go, well, XYZ company did that, so why aren't we doing that? And so you start to see higher risk M&A, you start to see companies, the larger companies starting to go down the food chain. So the developers started getting acquired. And at a very, very toppy bull market, you see early stage exploration stories being acquired as well. And Christian, my last point on this slide is this is when the generalists are buying, and this is when the savvy resources investors are selling. And in my experience, when I've gotten questions by generalist investors at a particular commodity, and this happened with lithium, about 8 months before the lithium price collapsed and the subsequent decline in the equity valuations, I was getting a lot of incoming calls from generalist investors that had never ever invested in mining, but had heard of this thing called lithium and the movement with EVs, and were starting to do their research. And so when you get that last money that is not necessarily well educated about our sector, to me, that is a very, very material buy signal. And so our job as a company is to try and understand where we are within this cycle and adjust our behavior accordingly, because at the end of the day, we have to spend money wisely, and it's really aimed at generating shareholder returns.
Great. Thank you. Next question. Why has the company not been able to generate the share returns of companies like NGEx and Philo?
Okay, so I'm taking this one again. For Canadian investors that are listening to this, retail institutional, the Lassonde curve is a phrase that they'll be very, very familiar with. Really, Pierre Lassonde, very, very famous mining guy, has talked about this. And really what this references is very, very predictable company share price movements, depending on where they are in the evolution of their business. And so what this chart shows is theoretical relative share price performance, depending on where you are in the evolution of your life cycle as a company. And so as a company advances, in my opinion, the time that you'll have the most alpha and by that I mean where a news event can materially impact your share price above and beyond movements to the underlying commodity, that's in the discovery phase. And we have seen this time and time and time again. A decent drill hole, and this is why investors are very, very attracted to the higher risk part of our business. We can see one piece of information, which is a drill hole, that can move share prices in excess of 50% in a day. A recent example yesterday was a company that I had been involved in, was Bravo. They had a great drill result. Their share price moved up plus 50% in a day. We saw this with Chalice, with their exceptional discovery in WA, where you had unbelievable share price performance over a number of years. So why do you have such outsized share price performance? Christian, if you could just tap the next slide. Oh, it's missing something here. But I think that in the discovery phase, what occurs is when investors don't know what the upside is, when they're just relying on drill information, they assume the upside is limitless. That's irrational, but that's what happens time and time and time again. And there's a couple of reasons for that. Most investors aren't technical, so they don't necessarily have a visceral understanding of what those individual drill results mean. And of course, companies will highlight their best drill results, and they're not necessarily representative of an ore body. So what you tend to see is this incredible, exceptional, upwards trending share price performance when you have a discovery. And the minute that truth comes out, and by truth, the first truth indicator is resource, almost always companies, when they release their initial resource estimate, they almost always disappoint. They almost never can fulfill investors' expectations as to the size of the resource. And then as a company advances their asset, and that alpha that's been generated by consecutive drill results starts to decline, there's an orphan period. And often share prices, best case scenario, flatline, and more generally trend down, because this is when reality sets in, and this is when companies are starting to go through the economic study phase. They're going through permitting, things that don't generally excite the average investor. What it does do, though, is start to generate interest from corporates. So you tend to see this downwards movement in the share price, and then you start to see an upwards movement in a share price as a company de-risks their project. They finance their project. And so there's always risk around financing a project. And why investors think that is risky is they don't know what that cost of capital will be. And so when a project is financed, generally investors say, okay, that material risk has been reduced. If this company does what it says it will do and delivers on a build, then and starts to generate positive cash flow, obviously this doesn't always happen, that's when they start to get very interested again. And so to this question with respect to NGX and Filo and ourselves, NGX and Filo have had exceptional discoveries. They are in the exciting alpha generating part of their life cycle as a company. They're in this discovery phase. None of us know exactly how big those deposits are, but wonderful discoveries generating huge amounts of investor enthusiasm. And they haven't yet had that truth meter come out. Whereas a company like Hot Chili, we're more advanced in our life cycle. And so we had our discovery phase more than a decade ago. And if you look back at that time, we had absolutely exceptional share price performance in parallel to what you will have seen with NGX and Filo. So what we are is in the resource definition phase and really going through those key steps to advance our asset, because we think we have one of those few assets that can be built in a timely manner. We have de-risked it materially due to the efforts of the management team over the last 10 years, in excess of the last 10 years. And so we understand this as a company and a board and a management team. We understand that if you're in this orphan period, you want to ensure that you've raised as much money as possible when you're in the discovery phase. And when you're in the orphan period, we understand that what will generate market excitement is material new resource growth or exploration success. And so our strategy has been multi-pronged. It is to advance our asset, our development asset, when we think we'll be rewarded for doing so aggressively. But it's also to ensure that we have exposure to potential alpha generation opportunities. And that's in the form of this company's ability to acquire assets for a very, very low cost versus many of our peers, and add value on the drill bit via smart exploration. And that's because we acquire assets that aren't truly grassroots, that we have some evidence of existing either historic mining activities, oxide mineralization, and that maybe have a potential for a larger system. And so kind of stepping back, as a company, what we're trying to do is manage our business as the best as we can, depending on where we are in the cycle and also where we are in the evolution of our company. And us, like all companies, our share price will move when the copper price moves. And we're also trying to generate excess performance by resource growth and exploration success. And so that was a very long-winded way of talking about our strategy.
Thank you, Nikki. Excuse me. Our next question, we've kind of grouped these into sections. So our next section is next steps and use of funds. And our first question in this section, please discuss the use of proceeds. What is the breakdown? And please provide an update on the PFS and overall development timeline for Costa Fuego.
Yeah, thanks, Graham, and thank you, Nikki. That was a great contextual, I guess, oversight on where we are in the cycle and where we are within the development stage of Costa Fuego. So with $37 million of treasury available, this is a significant inflection point for the company. As Nikki said, this allows Hot Chili to put its foot on the accelerator on all of our key 4 platforms of strategy for the company. 2 related to development now. So this is accelerating towards the completion of our pre-feasibility on Costa Fuego, a circa 100,000 tonne per annum copper project with around 50,000 ounces per annum of gold production at this point in time, as well as advancing our water business case study, where we are anticipating to split that into a separate company later this year. So on the development side, it's pushing forward towards pre-feasibilities on both of those key growth platforms, and then also investing quite heavily in growth for the company. We've set aside around up to 25,000 meters of drilling that will be available for low-hanging fruit as we complete the final stages of consolidation, the second aspect of our growth strategy. So a heavy investment on further consolidation for Costa Fuego, on drilling advanced targets that we're looking to add, and we've been obviously building momentum on that consolidation strategy, but being able to actually parallel that in bringing forward and delivering on our timelines to development. We have a very unique position. We're probably one of the most advanced on permitting of the large-scale copper projects globally outside of the control of major, and we're one of the few meaningful projects that has timelines to actually bring this project into production this decade to meet that rising demand thematic. So significant for the company to finally be in a position where we can run our business in parallel with the cycle and in the context of delivering that sex appeal and that excitement, that early stage of the Lassonde curve, and taking advantage of 16 years in country and the relationships that allow Hot Chili to be at the forefront of new opportunities in the copper space.
I might just interject here. With respect to that Lassonde curve, I meant to adjust it because I believe that you don't have the downwards drift or sideways drift in a share price if you're a developer in a bull market. It's the only time that the market rewards you to be a developer, because the industry, all industry participants start focusing on growth. The larger companies start focusing on growth. Investors are focused on growth. Everybody is focused on growth. And so again, as to why we think we're well positioned for what we think is a material increase in the copper price is, number one, we have a development project that is imminently developable and in a relatively short time frame versus our peers, and overlaid with a lot of future growth opportunities that we hope to exercise over the coming months.
Exactly. So to put it another way, taking advantage of our leverage to copper price and where we are in the cycle, and adding in significant growth opportunities.
Thank you. Next question involves water. Can you provide a general update on the strategy behind a potential water business?
Yeah, thank you, Graham. Look, the water concept as it started nearly a year ago, Hot Chili looking inwards at its assets that it had developed to be able to unlock Costa Fuego, provide water in an area of the world that is under significant water stress, where new developments in mining and industry are not able to access continental water going forward in countries such as Chile that are in the Atacama. This is one of the key things that has holding back new supply in the copper space. We happen to sit in an area that's very water stressed, and we have the only maritime concession to extract seawater from the coastline within that region. That region accounts for numerous large-scale copper developments. We estimate it represents around about 20% of new global supply over the coming 10 to 15 years, just from this one region. And Hot Chili sitting with the only necessary permits and water licenses to be able to supply seawater from the ocean. So that is great for Hot Chili. We have a project that can be processed using salt water, but it also represents a very, very significant opportunity for our shareholders in that we have the necessary permits in place and now have a second maritime application going in that will allow us to also supply desalinated water to this region on a very large scale basis. This is at a time where the government of Chile is obviously promoting this multi-user water networks to be developed in the north of the country to solve this water scarcity issue. So what we've announced recently outside of that second maritime application that will allow us to discharge brine and allow us to upgrade this to a desalination opportunity, as well as the supply of salt water to Costa Fuego. We've announced that we'll be splitting this into a NewCo. That process is well underway. We hope to be in a position where that NewCo is sitting as a controlled entity of Hot Chili later this year, in parallel to delivering pre-feas level engineering on our scenarios to supply water to third parties. Over the past 3 months, we've been really interacting with a number of those potential water off-takers that we've identified within the valley. And we've also been having quite a lot of interaction with major strategic investors in that space, infrastructure partners that build, operate, transfer these major water projects globally and also within Chile. So at the moment, the company is in that relationship build. I would expect that we would see news flow on all of the matters I've just discussed going forward throughout the year, but certainly something that we are looking to add a second string of value to the company and take advantage of that in terms of how we look to potentially monetize that asset.
Thank you, Christian. Our next question, it's a two-parter. You may have partially just answered the first part just now. What has the reaction been to the potential water business opportunity from potential water off-takers? And how would Hot Chili see this being advanced, given the significant capital required for such a venture?
Sure, Graham. Well, look, the reaction has actually taken Hot Chili's board and management by surprise. We've been interacting with major mining companies to small mining companies, and also outside of the 3,700 litre per second customer base, which we identified in our original scoping study. We've seen additional off-takers actually coming proactively to the company and wanting to discuss their water requirements with Hot Chili. So we've seen a significant amount of momentum being generated from potential off-takers. I imagine that will start to convert towards Hot Chili being able to secure off-take agreements in the future. But more importantly, I think that this venture that started as a concept is really gaining a lot of traction. So what we're now starting to focus on is exactly what the options are for monetization of this water business. Is this a spin-out co-opportunity for the company? Is this a private investment vehicle which we can sell equity stakes in to allow us to fund our copper project without issuing any shares in Hot Chili or without diluting the copper project itself? So there are a number of options which we're looking at, and those no doubt will become clearer as we move through those final studies and interactions with those potential infrastructure partners. But in terms of is Hot Chili contemplating advancing a large-scale copper project as well as a large-scale water business, and looking at the massive amounts of capital that would be required to build a water business? No, we are not. We are looking at this as an opportunity for a major international strategic partner to be secured, and for Hot Chili to simply be an offtake partner for our Costa Fuego project on our saltwater requirements, but also for our shareholders to gain exposure to what that potential future water business may be, either as a minority shareholding interest eventually, once we have built our copper project and funded that. But more importantly, this is a very, very unique opportunity that you do not see very often. It actually reminds me of probably one of the biggest value components of a company called Atlas Iron, that was a prominent company in the last iron ore boom. Arguably, it wasn't their iron ore assets in the Pilbara that actually held the most value for that company in the end. It was their position that they had secured with a major port in the Pilbara that gave them an advantage over all of their other peers in that area, and actually was something that generated a huge amount of value for that company. That's how we're viewing water for Hot Chili. A very, very unique opportunity that may in fact allow us to build this project without the usual issues that a junior faces on dilution in being able to fund a +1 billion dollar copper project. So this represents a significant opportunity for our shareholders.
Yeah, and perhaps to wrap that up, simplistically speaking, no project, no water. And sorry, no water, no project. I got that wrong, as one of our Chilean colleagues said. And water is the biggest risk that any development or mining company faces globally. Everywhere in the world, that is what people are concerned about. And it's particularly material in Chile because Chile is a low water environment. And essentially it is becoming very difficult, if not impossible, to permit continental water extraction. And so this permit, and again, this has all occurred before I joined the board, but what impressed me and what attracted me to this company was management's propensity to take a very long-term view and understand that water was exogenous risk, and they started working on removing that risk or reducing that risk materially over 10 years ago. And so again, our job is to try and find value creation opportunities where we can within our existing asset base.
Yeah, thank you, Nikki. And I would add to that, you've provided fantastic clarity on just context of a commodity cycle, context of a discovery through to the development. But the context in the copper space in particular, one of the key things that is creating this inelasticity of demand and that muted supply response, which are some of the key fundamentals as to why this next cycle for copper is very different to the previous cycles. This is all about a lack of supply and a lack of a supply response in a timely manner. Large-scale copper projects take anywhere between, some analysts are saying 15 years. We see studies out to 23 years on average. And the world hears this, but it doesn't really understand it. I've had to address this numerous times. And people really don't understand, why does it take so long to develop a large-scale copper project? These water assets alone have taken us, at this stage, 11 years to secure, 10 years just to secure our first maritime concession, as well as our coastal land access. So these are regulatory impediments in the largest copper producing country in the world, accounting for 25% of global copper production. These are the factors that actually influence those timelines. They're removable factors. It means that Hot Chili has almost a 16-year head start on any other copper discovery being made today in terms of its time frame to get to production. So we're entering the final stages of our investment in building a large-scale copper mine. We have all of those permits in place. Our neighbouring projects do not. Most of the large-scale copper production that the world will see coming from the majors or coming from outside of the majors, and there are not many projects of this scale available. Most of them are actually located in the high Andes. They are a very, very different subset of large-scale copper production. They suffer from long development timelines, longer than coastal range development options such as Costa Fuego. We are down on the coast at 700 meters. We are not at 3,000 or 4,000 meters altitude in nosebleed country. So what does that mean? It means that the previous cycle was littered with large-scale copper projects that blew out their capital estimates by a factor of 2, sometimes 3 times. $3 billion projects going to $6 billion projects. And when we look at projects down at low altitude, those projects did not see those capital overruns. They did not see 4-year build times. They saw 2-year or 18-month build times. They met their capital requirements and ultimately delivered low-risk projects. So when you compare a high Andean project to a low coastal range project, you are talking about 2 very, very different sets of risk parameters. And that is what Hot Chili has in spades. We have low risk associated with our permitting, low risk associated with our elevation and with our capital and operating costs. And those are ultimately the key ingredients to being able to deliver something very differently to what the market for copper is expecting that new supply will come up against.
Thank you, Christian. Thank you, Nikki. Just a heads up, we have 8 minutes left, less than 8 minutes left of the webinar. So we have one last question that we can get to the questions online, but just keep that in mind and bake in closing remarks. So last question, can you provide some details on your Chilean consolidation strategy and the potential for future growth opportunities?
Sure, Graham. Well, look, our consolidation strategy has been very clear from the beginning. We have made the Huasco region on the coastline our home. This Costa Fuego copper hub has been growing for 16 years since we took this company privately and then listed back in 2010 at the end of the last copper cycle. So we have built this through an entire cycle. We have basically mopped up all of the key assets in this area and surrounded a satellite strategy around our 2 bulk tonnage deposits that sit straddling the Pan American Highway and next to port facilities. We have just made several moves over the last year in continuing to pursue the last of the opportunities in this coastal region. More recently, we've moved into the Damaco Mining Center, a prolific copper mining hub to the south of us, owned primarily by private landholders. And I expect that we'll see some further news coming out of that move by the company. To this point, Hot Chili has developed as a single asset operating hub centered on our Costa Fuego asset. In the future, we'll obviously also be looking at numerous opportunities through Latin America, particularly focused on Chile, that leverage off of over a decade of relationships that have been built. And those relationships have allowed us, and particularly a key member of Hot Chili's team who has been by my side since we started this company, our Vice President in Chile, Jose Ignacio Silva, who has been the architect behind these relationships with myself. These relationships have afforded Hot Chili to be a company that sees opportunities before others do, and we'll certainly be looking to take advantage of that. As Nikki discussed, we are very much focused on also bringing new discovery and sex appeal to this story on top of being able to deliver on our timeframes to bring Costa Fuego into production this decade.
Thank you, Christian. We're going to move to online questions. There were several questions, and most of them have disappeared. I'm guessing we've answered most of them with the presentation. There are a few. One wants to talk about the PFS, and there's been some timing issues over the last few years with the PFS. Do you anticipate any more money to be raised to get the PFS done? And when do you expect to have this PFS ready?
Sure, I'll answer that and probably allow Nikki to make some comments. We completed a pre-feasibility on our original discovery Productora in 2016, and I imagine this might create some confusion for shareholders depending on the length of their investment in Hot Chili. That pre-feasibility was into the end of the last copper cycle, into a declining copper price, and we were trying to complete that study almost as fast as the copper price was driving lower below long terms and effectively rendering the economics uneconomic on that original asset. We needed scale, and we got that in spades with the reinvention and reinvigoration of the company with the major addition of Cortadera. Fantastic discovery that has quadrupled the resource base. We sit with over 1 billion tonnes, 85% measured and indicated, and a fit-for-purpose resource base that will allow us to build Costa Fuego into what we envisage. So while the equity markets over the past 2.5 years have been in an extremely depressed state, money has been very hard to come by in the markets. Any capital raisings being undertaken, even last year, late last year, were being undertaken at, I guess, total asks coming in at half or a third of what the companies needed. So very much the type of raisings that Nikki discussed, keep the lights on, don't, the money didn't really get anyone very far along their timelines. Discounts were deep, option attachments were heavy, and that put a lot of upward ceiling on price appreciations for any of those juniors. So tough market conditions. Those market conditions for copper in particular, and when we talk about copper price has seen quite a significant increase in the last 3 months. But actually, there's not a lot of equity raisings that have occurred. The juniors are struggling to raise money, and generally the equity markets have been tough. So Hot Chili managed itself very well by almost pausing most of our pre-feasibility on Costa Fuego, delivering a PEA on what we had already completed, about 80% of a pre-feasibility, and we had the money up our sleeve to deliver that pre-feasibility. But from delivering something into a situation where our cash reserves would have been extremely low is not a positive outcome for shareholders. So what we have done now is we've very much listened to the market. We've seen all of the key indicators for the development of a new cycle, and that is really a key thing that the board has taken into consideration to now accelerate. So this treasury puts us in a strong position. We can deliver the last elements of the pre-feasibility. And so no, we don't need any further funding. We have more than enough funding. As I've said, nearly 50% of the funds will be available for growth. And that allows us to deliver with confidence.
Thank you, Christian. We have 1 minute left, so it doesn't give us time to get to the rest of the questions. So it leaves us some time for some closing remarks, and pass it over to you, Christian, and you, Nikki.
I might just jump in. Look, one of the reasons we're doing this is we want to ensure that we engage more proactively with our existing and potential investors. And so we hope to start doing this on a more regular basis. And I think next time going forward, we'll perhaps give some warning so that we can have questions collated, and probably you'll realize that Christian and I are good talkers. And so we apologize that we didn't necessarily get to some of the other questions. And so again, I would say that this management team is very, very open to incoming calls. And so if anybody has questions or queries or wants to better understand the company, please reach out. Speaking to us directly versus relying on chat forums, I would say, is probably a more a way to better understand and get answers directly from us. And so we really, really appreciate everybody taking the time to listen to us today and to engage with us. And we hope to do this on a continuing basis.
Yeah, and lastly, Nikki, I would add, we have a fantastic shareholder base, a very, very loyal retail shareholder base. We had a $5 million share purchase plan that we wanted to provide the same opportunity to all of our shareholders. I was very, very pleased with the board's decision to be able to upsize that share purchase plan to allow more of our shareholders to participate with this recent financing. And when you're able to close capital raisings of $25 million in less than 24 hours and send back significant institutional demand that was not met, and then see the same thing occur with the share purchase plan. It was closed early after 5 days of exposure only, and with 6 hours of warning before we closed it early, almost a doubling in the demand of that share purchase plan. So that's a significant endorsement from our existing shareholders, from new institutional investors, and I do note that some of the leading performers within the copper equity space, if we talk about a Philo or we talk about an NGX, everyone likes to talk about the best performing stocks, and what are the key elements that those stocks also have in their shareholder base? They have a growing institutional presence, and an institutionalization of the register occurs in each of those examples. And so we are very, very pleased to see the institutional support of Hot Chili really starting to grow and growing from our base that we have, or our beachhead in North America that we've developed. So that's fantastic to see for all shareholders.
Great. Thank you, Nikki. Thank you, Christian. Thank you, everyone. You know how to get a hold of us. We are available, and we look forward to speaking next time.
Thank you, Graham. Thank you, Nikki.
Thanks, Graham. Thanks, Christian.
Bye.